Too much? Okay. Can you move over a little bit this way, and I'll move a little bit this way.
Okay, perfect.
And this is about as cozy as we can be.
Okay. All right, so now we'll do this. Okay, everyone ready?
Mm-hmm.
All right, let's see. Travis armed. 3, 2. Oh, this one is 7 minutes and 10 seconds.
Yeah.
Okay, 3, 2, 1.
Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And the certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. I believe they were voted best in San Francisco. Probably going to be best in Marin soon, too. Today's trivia theme is general trivia. Now, today we have a special guest, mortgage broker David Armstrong of Movement Mortgage. David, welcome to The Best of Investing.
Thank you, Edward. I'm really happy to be here today.
Good. So now okay. We used to have Ed Diaz on from Movement Mortgage, and you're kind of like his business partner?
Correct.
Okay.
Yes.
And one of the things that we've appreciated, now, I help Pacific Private Money, and they are in the short-term bridge loan financing. Now, the way I look at it is you guys are kind of in between us and a big bank, like let's say Wells Fargo, because you guys can actually work pretty quickly too, can't you?
Correct. Matter of fact, that's one of our trademarks of Movement Mortgage, that the founders, when they opened the company in 2008, right in the midst of the Great Recession, was how can they do things a little better and quicker to better serve the real estate community, the realtors and the borrowers looking to purchase homes. So they re-engineered the process. They call it the 671, underwriting the loan file in 6 hours, processing it in 7 days, having it in docs on the 8th day, which by law is the soonest a borrower can sign their loan documents to purchase a home when they're getting financing.
Wow, that's quick.
Okay. Now, but actually Pacific Private Money can, and this is not that's really fast, especially when you're talking about with big banks. Pacific Private Money can actually fund a little faster, though, if need be.
Yeah, I mean, there's certain situations where we have funded faster. I mean, it depends on the type of loan too.
Yeah.
Business loans are non-owner occupied or non-consumer, have different regulations.
Okay, but owner occupied, I think if there's like an emergency situation,
yeah,
waive TRID and all that kind of
yeah,
stuff.
and we don't like to do that. But if there's a bona fide financial emergency,
yeah,
then sometimes you can. And a lot of times, people come to us in an emergency. It's at the 11th hour.
Exactly.
But still, I mean, at the 11th hour, if we can provide a loan to them, sometimes if they're in a purchase, the other party will extend escrow, knowing that, hey, this person can come through and close. They just need more time. That's the ideal scenario.
Okay, but in a typical situation where a borrower is just looking for, wants to do a somewhat fast close, usually sellers looking for their money quickly, instead of going to a regular bank, are you the mortgage banker too, or just
Correct.
the broker? Okay, so you guys actually fund the loan.
That's correct.
Okay, now, but what kind of regulations do you guys have?
Well, we fall under same regulations as a lot of the banks. We don't regulate it as FDIC,
okay.
But we are under the Consumer Finance Protection Bureau, Department of Corporations.
Okay.
So we're heavily regulated as well. Matter of fact, on that note, just from 2008, pre-2008, the average cost of a loan was about $3,500 to the consumer.
Okay.
Today, because of the heavy regulation, it's about $7,700.
Really?
Wow. Yes.
That's interesting.
So all the bankers are very heavily regulated and go through multiple audits every year.
So what is the actual cost? That 7,700. What's that comprised of?
So that's going to be lender fees, which is the underwriting, the processing, credit report, tax service, your appraisal. It will also include third-party fees with the title and escrow, transfer tax.
Okay, so some of that will go up or down depending if some of them are fixed costs and some are variable.
Right.
I don't know how much different it is, percentage-wise. Like on $1 million loan, would it be 7,700 or would it be higher.
It could be higher, correct.
It could be higher than that.
Yeah, so the cost of the loan is due to additional compliance,
Okay.
having compliance officers, quality control, underwriters. So the staffing requirements for the mortgage lenders has increased tremendously. So their operational costs went up, and that gets passed on in various ways, typically through rate and price of the loan.
Sure.
Okay,
So
because
that-
you guys aren't necessarily more expensive than
No.
your big banks. You just can do exactly what the big banks do, but just do it faster, right?
Quicker and more flexible.
Okay.
Correct.
And then what would there be reasons why you would have to deny a loan? Because again, you're not exactly like a regular bank, which by the way, I want to divert for just a second. It's so funny. I remember years ago, borrowers were, saying, I don't know if I want to borrow from this bank because, I don't know, if they're either real or their money is real or something like that. It was kind of crazy. I said, wait a minute. I said, remember, you're the one who owes them the money. Who cares if, the only reason about them going out of business that makes a difference is just the hassle of who do you pay next. But other than that, they were like, well, what if they go out of business? You go, you're the one with the money. You're the one with the house. Who cares?
That's true.
All right. So the difference in the regulations, like, why can you guys work so much faster than the bank?
We have the ability to staff more quickly, less layers of management to go through.
Mhm.
So we have access to decision makers that can bring on resources quickly. And that's the primary reason. Banks, are large in nature, and they often will have operation centers in various locations around the country that may take time to get staffed up.
Gotcha. Tell you what, we're going to cut to our first commercial break. Again, we're talking general trivia. And by the way, David, if you know the answer to this, don't answer yet because we want the audience to give a shot at it. You can do it afterward. All right, here's our first trivia question. What does WD stand for in WD-40? You know that lubricant that we all use? It? Really? You think so?
Uh-huh.
I didn't know that one. Okay, call 888-912-1190. If you're the first caller with the correct answer, you're going to win that free tanning certificate. That's our trivia question. What does WD stand for in WD-40? All right. Don't touch that dial. You'll see the best of investing, and we're going to be right back. Pretty good, huh? Nice and simple.
Yeah,
That was
nice.
good. How was it?
Good job.
Yeah,
right?
it's great.
Perfect.
Yeah.
Yeah, he's looking at the wavelength to, because sometimes
To see if the voice is coming.
that's it. It has to be within a certain range.
Oh, good.
Sounds good.
Oh, good. Great.
Um,
All right.
Nice segment.
Do you know the answer to that?
I don't know
Okay,
the answer.
I was going to say I would let you answer it.
WD. I know I was told it once, but
April 28th, yeah, segment one.
Oops. Track 1. Is that okay? Is that how you had it before?
I just call it segment one, whatever you want to call
Or I'll
it.
call it segment. Just to make you happy. Segment
April 28th.
18.
Oh, is that how you did it?
Mm-hmm.
Oh, okay.
Does that work?
Yeah, but however.
BOI segment
okay,
1.
April 28, 2018, segment 1. Oh, that's
Okay.
how I do it.
I want
Okay.
to keep it consistent. Okay. 018. There we go.
2018. 2018, segment 1. Okay,
Okay.
perfect.
Okay. Let's see. List all.
And
Save.
well, we can go into your question first.
Oh, yeah. Yeah. Okay.
That's a good question.
This. Okay, this next one is 828.
Having fun so far?
yes.
Good.
Okay, ready? 3, 2, 1.
Welcome back to the best of investing. Again, I'm Edward Brown, your host, along with Nam Vaughn and our special guest, David Armstrong of Movement Mortgage. Well, I like that name, by the way. Trivia question number 1. What does WD stand for in WD-40?
Water displacement.
That's right. Very good. Maybe you must be a mechanic or something.
I use that stuff every once in a while. It's great for mechanical tools and
It
stuff.
is. I just never knew what it stood for. I just thought it was like just one of those terms.
And I think it was the 40th version of it. So
Oh, is that right? That's what
yeah,
the 40
kind of
comes
like
in.
Heinz 57 sauce. I
Yeah.
think it was.
No, Heinz 57's got 57 ingredients.
Oh, never mind.
That's the reason for that one. So anyway, we want to make a mention here for the Napa Valley, the River Terrace Inn. So experience the best that Napa Valley has to offer, a perfect combination of wine country, serenity, and urban hospitality at Napa's Valley's most luxurious, one of Napa Valley's most luxurious hotels, the River Terrace Inn. It features luxurious accommodations, personalized services, and a serene riverfront setting. It's within walking distance to various tasting rooms, shopping, restaurants, and many nightlife options. Check them out at riverterraceinn.com. Don, you had a question for David. Specifically, I guess it's because Pacific Private Money provides short-term loans.
Yeah, so we did a presentation earlier this week to a group of realtors in San Francisco, and we talked about our bridge loan, how in a seller's market it can be a great opportunity to get a client into a home before they sell their first home. And a question came up is, in order for the borrower to refinance out of our loan, are there seasoning requirements that a bank will want to see before they refinance them out of our loan into a conventional loan?
Yeah, it's a great question and comes up frequently in conventional lending. And a lot of the seasoning requirements is around title, how long you held possession of the property on title.
Yeah.
But in purchase lending, when there is a bridge loan or a private money loan that's short term, you have a 90-day window whereby you can get the same purchase financing terms on a refinance as opposed to a refinance term. And where the difference is some of the underwriting guidelines will have a little more restrictions around a refinance loan versus a purchase money. They used to consider it a cash out refinance. Now they consider it a rate and term, which is very similar to the purchase loan. So you get favorable interest rates and pricing when you do that.
Quick question, from a recourse versus non-recourse. Purchase money, owner-occupied loans are non-recourse. Would this be still considered a refinance, and it would be a recourse loan if it's done within that 90-day period?
Correct.
Okay, so that's the only downside, but it's not really that much. I don't know how many people really nowadays walk away from their home. Or let's put it this way: how many times does a bank sue someone on their house? Not too often.
And the other question, seasoning, is that relatively new, or did that come around 2008 when people were? I thought that term or that requirement came about because of the REO market and people buying properties and.
I think it became more prevalent and more known then, but it actually was around prior.
Yeah.
And it used to be prior to 2008, a lot of brokers would refinance a home multiple times within a very short time frame because interest rates were favorable and they were dropping.
Right.
And they were doing what was classified as no-cost loans.
Mm-hmm.
But the no cost was really, you're just taking a little higher rate and the lender was covering the closing costs. So if the rate dropped in a short time frame, a broker would refinance that client, lower the rate with no out-of-pocket or additional cost on the loan.
And still make a commission. Right?
And make a commission,
Yeah.
but the lender was losing money because they
Yes.
weren't retaining that loan for a period of time to
Right.
gain the interest on
Now,
it.
how many times would the bank or lender in that case just lower their rate because they knew they were going to get refinanced out?
The lender typically didn't.
Really?
No.
So they were willing to just go ahead and lose that loan?
They would. There's instances where someone would refinance. I've heard as many as 5-6 times within a year.
Yeah.
And what
Wow.
they do, what the broker did, is they would take it to a different lender each
Yeah.
time, so they wouldn't know. So that's
Yeah. Because they wouldn't know until it's too late.
right.
Gotcha. Yeah.
So,
It's funny. I remember years ago when interest rates were going way up. After my dad had passed on, my mom was getting letters because at the time she was in a low at the time, 6.75% interest rate, and rates were about 13%. So the bank, unsolicited, sent her a letter saying, hey, if you want to refinance, we'll even pay you $1,000, to refinance. And I looked at the terms. I said, wait a minute, they want to go at 13%. I go, Mom, forget it. Keep that 3/4% rate.
definitely read the fine print.
Yeah.
Twice.
Hey,
Yeah.
before we forget, David, if people want to, there's really no downside to someone calling you because, you're an independent mortgage broker. Can you go outside of the lender itself, in other words, like if I go to Wells Fargo, they're going to pitch me a Wells Fargo loan, but you're kind of independent, aren't you?
Yes, correct. So a mortgage banker, so essentially look at a couple different classifications. You have the bank that's FDIC insured, like a Wells or Bank of America.
Yeah.
And then you have mortgage bankers, Movement, Caliber, various other guaranteed rate companies.
Okay.
And then you have the mortgage broker. The mortgage broker can outsource to multiple lenders on a wholesale channel. A mortgage banker like myself, we have our internal underwriting and fund the loan with our own money,
Okay.
but we can also broker to other lenders if need be. So a mortgage banker, we have what's called delegated underwriting. So we have a suite of investors that we can sell the loan, but we also have the authority to underwrite the loan on behalf of that investor according to their guidelines. So we'll take on the risk of selling the loan if something happens, early payoff or default. We may have to repurchase the loan, but we have a little more flexibility. And that's another reason why we have the quickness to close, the speed
Okay.
and flexibility.
That's great.
Yeah, so there's really kind of no downside to calling you first and saying, hey, listen, see if your company can fund the loan, and if not, get me a better rate or give me a rate somewhere else.
I kind of view it as the best of both worlds,
Really is.
being able to go to both sources.
Before we cut to a break, how do people get a hold of you?
So they can reach me. I'm located here in Novato, and they can reach me on my cell phone. It's the best, 415-250-7137, or they can go to david.armstrong@movement.com.
Okay, and that's from Movement Mortgage,
Correct.
which is independent mortgage banker.
Correct.
What is your geographic territory?
So I can lend anywhere in the state of California. That's
Okay.
where I'm licensed. So that's
Okay.
my footprint.
All right, so people outside of Novato can still call you for a loan.
Yeah, and outside the state, we're a nationwide lender, and we have resources that we can refer to a colleague.
Very good. All right, trivia question number 2. What floor number is often skipped in Chinese buildings as the 13th floor is in the west? So have you ever been in an elevator and you don't see a 13th floor because it's bad luck?
Right.
In China, what Chinese buildings, what number do they skip? All right?
Oh,
I know this one. Don't touch that dial. The best investor will be right back. All right.
I don't know.
Okay, so we'll
Oh, I think
we'll go to deal of the week and
Yeah.
trivia, or not trivia, but question.
Is it 8?
Well, you may answer that on the air.
All right, I'll ask. 'Cause I'm not sure. I know.
Don't look and don't Google it.
My friend did a lot of real estate sales to Chinese,
Chinese, oh,
and he said if the number and address,
Yes.
they wouldn't buy that home.
Yeah.
No matter if they
You know
love
what's funny? I mean, it's weird. I kind of look at a little bit. I don't get too wiggy about it, but sometimes I look at it and I go, yeah, there's something like, about, well, what were the Munsters, 1313 Mockingbird Lane?
Yeah.
Remember that?
Oh,
that's right,
that's right.
1313. Or 666, you know?
Okay, let's see. All right, this next one is 810.
810, yeah.
So track orange. Okay, ready?
And feel free to just, as we're talking, just
Yeah.
chime in for
Okay.
questions and stuff too. Right?
Okay, 3, 2, 1.
Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan and our special guest, David Armstrong. Second trivia question. What floor number is often skipped in Chinese buildings as the 13th floor is in the West?
Well, my best guess, which I don't know if it's accurate, but I would guess 8.
What do you think?
3.
No, this one I actually knew. It's number 4.
Oh.
Four is a bad luck number in the
Huh.
Asian culture, specifically in China. I think it's in the Asian culture in general, not just China, but because I think Japanese people are.
I don't know. I'll have to ask my mom and
If
dad.
that's Vietnamese, that's different.
Yeah, well, it is an Asian culture.
That is true. Yeah, no, I bet you they know that.
Yeah.
They should have called them during break. Okay, so now we're going to move over to you. Since Mark's not here, why don't you give us a very brief background of Pacific Private Money and give us a deal of the week, and then we've got an email question.
Sure. So Pacific Private Money, we're private lenders here in Novato as well. We make loans when banks can't. So we're Plan B for conventional lenders.
Well, in fact, movement mortgage, sometimes some glitch will happen where it doesn't fit their investor portfolio or
Criteria.
yeah.
Yeah.
And you've actually gotten referrals from them too.
Yeah, we're happy to. We don't compete, so we don't have competing products. Where, we're in the short-term lending space. We're typically there to solve what Mark likes to call a transactional distress,
Mhm.
not borrower distress in that they have a 500 FICO or sub
They're going
600.
bankrupt.
Yeah, it's usually they're in the middle of a regular transaction purchase, and they either run out of time, or some glitch came up where they can't get conventional lending. They come to us oftentimes through a mortgage broker, mortgage banker, a loan officer. If we can solve the problem, great. We put them in our loan, and then they refinance typically within a short period of time out of our loan back into a conventional loan. So,
And Tim, is it also more heavily weighted towards the equity position in the
Yes.
property?
yeah, we make our decision more off of equity than FICO. Now, FICO driven, although we did an analysis several months ago of the average FICO score of a lot of our of a portion of our borrowers, and it was in the high sixes. So it's not like, again, it's not like they're, we use examples, deals of the week, and we have a few today where the borrowers have smoking credit, 800. And it's distress, or they've run out of time.
Okay, so give us an example. Why does someone who has an 800 FICO score need you?
Yeah, so that'll take us to a couple deals of the week. First one is a deal that we did in Rohnert Park. It was, so you think 20% loan to value.
That's pretty low. That's pretty
yeah, it's
conservative.
really low. And a bank would look at that probably all day long.
Yeah.
And this person had excellent credit too. Excellent credit, very low debt. They just didn't have enough time with the convention. Well, the bank needed more time.
Okay.
And they needed 112,000 loan from us.
So the property's like 500 something thousand,
Yeah.
and it's worth 500, and you're giving them a loan of 112
Mhm.
as a first mortgage,
Yes.
and sounds a little too good to be true.
No,
But
it was
but-
strictly because of speed.
Yeah.
Like movement, you have a nimble workforce.
Right.
And for us, same thing. We have a nimble workforce that has a lot of experience in lending, conventional lending as well as private lending. And for us, it's does the deal make sense? We're holistic.
So wait a minute, let me kind of, just to put the puzzle pieces together, this person bought a let's call it $512,000 house. They put $400,000 down payment. They just didn't have that extra 112,000, but they needed to close the transaction so fast that the bank couldn't come up with the other 100.
The banks have their timelines,
Yeah.
and they're lending across the country, millions of loans, whatever that. So for those few scenarios, and they really are a few scenarios, a lot of deals for us, but
Yeah.
for your national lenders, there's a few scenarios where they're okay, they're on the margin, they're okay to deciding it doesn't fit our box.
That's true. They have enough volume. A lot of these
Right.
guys are so busy that they just need more. That's the interesting thing too, is that the banks, they're not like hiring a whole bunch of people. They're just kind of spreading the workload amongst a smaller pool, which is what a lot of employers did during the crisis from 2008 on. Is they just basically pile on more work on a fewer workforce.
But they're also, trying to streamline the process a little bit more. There's a lot of technology pouring into it where they can, maybe get more productivity, but still, it's like you have to meet their guidelines, right?
And often those guidelines in the industry, they put on what's called overlays.
Mhm.
Yeah.
So the investor, let's say Fannie Mae, Freddie Mac, that have purchased a conventional loan, they put out their guideline requirements. And let's say they'll go to a 620 credit score. A bank might say, we're not going to accept anyone below 640.
Right.
Gotcha.
So that's where a mortgage banker or a private money could come in handy, and they can fill that gap in guidelines and policies from a bank to a mortgage banker or a private money.
Well, and what did you charge the borrower?
I believe we charged 3 points for that file.
Okay, but I mean, but the interest rate is like 8.5%.
8.5%, 9%.
8.5, 9.
Yeah.
That's pretty conservative. We don't like to use the word safe because that's a taboo word. So we use the word conservative. In fact, that's the kind of loan where, as the lender, you almost don't care whether you get paid back or not, because there's enough equity in there, you're gonna get paid.
Right. So, you say it seems too good to be true.
Yeah.
Well, for investors, that is a great deal.
Yeah.
So we put that on Private Money Loans, which is our new website marketplace for selling loans, whether they're performing loans that we've previously funded through our fund or they're live fundings that need investors immediately. We put it on there, and within an hour, it was fully pledged. So investors understand, astute investors who many of whom we have in our system, see these opportunities and they jump on them very quickly. So it's great.
And you have a fund also, which we're going to get into in the next segment, because that a lot of people, if they're not, let's say, as sophisticated as doing individual notes, they like the idea of investing, let's say, in a mutual fund, which the Pacific Private Money Fund is similar in nature in that it's diversified amongst. How many loans do you have in the fund now?
In the fund right now, we have just shy of 100.
Okay, so that's a pretty widespread conservative pool.
Right.
Yeah.
Yeah, so in the next segment, we'll talk about the difference between private money loans and Pacific Private Money Fund.
Okay, yeah, because there's a question, an email question that comes in about would you consider a fund more or less conservative than investing in individual deeds, which it kind of is that comparison you were just mentioning.
Yeah.
All right, so here is our next trivia question. Boy, and someone like you who has worked with tools, apparently, because you knew what WD meant in WD-40, we have another tool question for all you tools out there. What holds the bit in a drill? What's it called? What do they call that? Do you know what I'm talking about?
I think I know.
You think you know. Do you know this one, David? Not sure?
I don't. I use a drill, but I don't know.
That's right. Well, what's the thing called that holds the drill bit? Okay, that's our question. Call 888-912-1190 if you're the first caller with the correct answer. You're going to win that tanning certificate. Don't touch that dial. We're going to be right back. Almost ran out of, I just realized I ran over. See, what I do is I try to save some seconds beforehand. Like I'll cut off earlier than we need, because in case we go over, kind of, as long as I don't go too far over or too far under,
it works out.
Yeah. It kind of heart breaks. That was segment number 3.
Well, this would be a good one. I have no idea what that is.
Is it a
Tooth?
chuck?
A chuck. Oh, chuck.
Very
Chuck.
good.
Yeah, that's good. That's right. Chuck.
Not a Charlie, but a Chuck.
A Charles.
A Charles.
Let's see.
Yes, that's right.
Wait, that was
That
segment 3,
was
right?
segment 3,
Yeah.
310. So here's our long segment of 917.
Okie dokie, all right. Okay. Anything you want us to ask you?
I'm just, most of my stuff that I jotted down was just kind of generic, buyer preparing for purchase, or, how to navigate all the lender choices.
Oh, that's a good one. That's a
Yeah.
really good one.
That'd be good, and I don't know if we have time, maybe what are rates doing these days?
Yeah, that was kind of one of the first ones, kind of the landscape of the market, which is good because, just kind of covered some of that. this morning.
And do you do commercial loans at all?
We can, but we typically outsource or broker them, but I haven't done a lot, so.
Okay. I need a commercial loan, but it seems like Chase is going to be the big best leader in this one. Yeah.
All right, let's see. All right, ready?
Yep.
3, 2, 1.
Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Nam Phan and our special guest, David Armstrong. Trivia question number 3. What holds the bit in a drill?
The chuck.
The Charles, that is correct. We're not talking horses and drill and bits, but we are talking drill bits. Okay. So trivia, let me say that. I always get this mixed up. An email question comes in, which is kind of alluding to what you were talking about before. And that is, would you consider a fund more or less conservative than investing in individual deed of trust?
It really depends on the fund. So you can generally answer for all funds. I can say our fund, in comparison to a lot of funds out there, is fairly conservative. Let me qualify conservative. If you're looking at the loan to value, in evaluating a investment opportunity, If you're looking at the duration of the loan, excuse me,
You also don't use leverage in your fund.
yeah, and you look at leverage, you look at all of those, I would say our fund is generally conservative in terms of real estate trustee investing or investing in real estate debt.
And what's the fund paying right now?
Funds paying between 7.5% and 8%.
Not too shabby.
Yeah, so, loan to value, for instance, it's
Yeah.
below 60% in the fund. I
Not
think it's
too shabby.
Yeah,
Again.
even for March, it might have been below 55%. So that was really low. The other thing too is the average loan term in our fund is 12 months-ish,
The thing I like about that is you don't get caught up in interest rates. If interest rates go way up, and prices drop, or you get caught in low interest rate environments, you just kind of go with the flow. It's like having an arm. in a
Yeah,
way.
so we prefer when we get a lot of loans, and we lend at up to 70% as a company, LTV. Typically, that's the cap. But we typically will pick the loans that have the lowest LTV, the shortest time frame, the ones that just kind of fit our general, types of loans that we do. We put those in our fund.
Which is why I invested in the fund, because my whole gambit is don't lose principal.
Right?
I'm okay if the interest rates drop, a little bit. I mean, but 7.5% today's market on a conservative return, a conservative portfolio, I think is very handsome. Before we forget, how do people get more information about the fund?
The fund, they can call us 415-883-2150, or they can go to our website, pacificprivatemoney.com.
Okay.
To learn more. We have an event coming up too.
Oh,
So our next fund event, we just had a fund event in San Mateo, really well attended. We polled our investor database to say, where would you like us to hold the next event? And it came down to the North Bay. Well, it's between North Bay, East Bay, South Bay, and SF Peninsula. And the choice was North Bay. So
okay.
we'll have it here.
Oh, okay.
Yeah, I didn't just make the answers up so we can not have to travel next month. But May 31st, it's a Thursday, and it will be from 6 to 8 p.m. People can call us to register or go to our website. So.
All right, yeah, because I know, as always, seating is limited. David, let's go back to you for a minute. What are interest rates going on? They've looked up a little bit in general, I know, in the last week or so. What are the interest rates doing?
A little turmoil in the market in the last week, and a lot of it stems around some inflationary fears. And obviously, when there's some inflationary fears, interest rate market tends to rise. In conjunction with that, the economy is strong, and the job market's been strong, and those are two other big indicators that put pressure on interest rates. So what happens is, your investors that are typically investing in mortgage-backed securities and bonds are looking for other higher yield investments. And so they pull away from the bond market, which puts pressure on rising those interest rates.
Yeah.
And so the forecast going forward, if you look at a year or two, is for rates to continue a little slow, steady climb upward. But we'll still be at historical lows, which is good news.
Okay. There was another point that you wanted to make about we were on break and you were saying you were going to mention something about lender packages or.
Yeah, I think one of the key questions that we get all the time, and for the consumer to prepare themselves in purchasing, is who do they choose with so many choices? There's a lot of lender choices out there. And the best advice is really, if you have an accountant, if you have a financial planner, if you have a realtor, or a good friend that has a referral source that they could refer you to someone that they've had a great experience with, is obviously one of the best places to start, because it's someone that you know and trust.
Right.
And that way you can help navigate. Because often the first thing someone's going to look at is what's the lowest interest rate, and they'll go to the internet and they shop online, and that could be a scary web of challenges with what you get there. And so you need to know and trust the person that you're going to do business with. Otherwise, you can get caught up on some misleading information.
So at this time right now, because you're more knowledgeable than the average bear on this, if you were getting a home loan right now, based on your crystal ball, with interest rates and that sort of thing, what kind of term would you choose?
Well, it's a great question. So the first question that I typically would talk to a borrower about is look at their past history of performance if they've bought before and they've owned a home. I look to see if they've refinanced that home. So length of term will help determine the cost of the money. So I don't look at the interest rate as much as I look at the cost of the money over the term that I need the money.
Yeah, I mean, if somebody,
okay.
if their habit is to buy and sell a house every 2 years, that's different than someone who wants to live in there 25 years.
Right, and national statistics through the Mortgage Bankers Association and National Association of Realtors is the average homeowner stays in a home about 10 years.
So
today.
10 years now.
It's gone up a little bit. It's about 10 years.
Okay.
It was about 5 to 7. So
Yeah.
about 10 years. So even looking at that, then you have to determine, does it make sense to not pay any origination points to get a lower rate, or should I pay a point or two? And it determines that, the best way to determine that is the length of time. And then also, should I look at a adjustable rate mortgage that might be fixed for 7 or 10 years?
Yeah.
Might be a better avenue than a 30 years. So the best thing when talking to a mortgage advisor is to have them ask you a lot of questions and provide a written analysis that you can see that in black and white ink.
Yeah,
That's great.
what do you think is the reason for the average person staying in 10 years? Is it because they're a little nervous with the market the way it is? Like, where else are they going to go?
I think life events, as you know, I mean, unfortunately, one of the biggest traumatic life events is divorce, which is at 50+%.
Right.
Children.
But I mean,
children,
that would make you want to move more then, the more divorces.
Yeah.
But right now the extension of time is increased. You said from 5 to 7 up to 10.
Oh, I see what you're saying.
Yeah, so
I think there's a lot of that is fear.
Fear, yeah.
It's been fear of the economy, coming out of the recession, and then job unemployment is high, and now that all that's self-correcting, I think we'll start to see that reverse itself and maybe go back to the 7-year trend.
Also, a lot of boomers are being counted in that
That's
number who have
correct.
been in their homes for a long time. I wonder if that's overweighting it, because maybe our millennials not getting into homes sooner and making that 10 years be weighted by the boomers who've been in their homes for
You're absolutely
decades.
right.
Oh, interesting. So
yeah.
when the millennials start to buy a lot, and those guys probably switch around a lot like they do their jobs. It's very rare for millennials to keep their jobs.
Like they update their profile pictures on Facebook. It's every 2 minutes.
Yeah. Did I change much in the last 2 minutes? I don't know.
And the millennial purchase market is increasing right now.
Yeah.
And the baby boomers are not downsizing as frequently as we thought, because they're looking at what can they afford.
Yeah.
They've got such a strong equity position, but the values have gone up a lot. They don't necessarily want to move out of that home.
So I'm toward the tail end of the baby boomers, and we became empty nesters a couple of years ago. And I don't know, my wife and I, we just like where we live. So, and the kids, when they come home to visit, not forever, but when they come home to visit, we want a place for them to stay. So for us, we decided we kind of want to stick around a while. All right. Hi, guys. We don't have another trivia question, but when we come back, we're going to have some closing comments and some interesting thoughts for the day. Don't touch that dial. The Best of Investing is going to be right back. Look at that, 2 seconds early. Okay, so this one's short. It's only 5 minutes long. Okay, so we're going to do kind of a wrap. Give out the information again.
Okay.
And let me know if you want to be like a regular, like once a month type of thing.
Okay.
We can
Yeah, since you're here in Novato.
Yeah.
It's convenient. I'm just down the street.
Absolutely. Yeah, because we're very flexible whether we record at my office or here.
Okay.
Same equipment, everything.
Yeah.
Second floor. Maybe we can continue on real quick with the baby boomer.
Okay.
I'd like to.
And then if you want, send him an email. He can send you the final show when we get it from the studio, because then it'll be, these are the 5 segments. We send it to the station. They put it together with the music and the commercials. So it's a real show.
Yeah, that's nice.
So when you send it
to MJ again. I don't know if MJ wanted. She didn't request it, but
it's probably a good idea to send her. Yeah, because then it's one thing to send her like these snippets type thing, but it's another thing when hey guys, listen to my show. Well, it's on the show, and then they'll be and the guy comes on and says, you're listening to the Best of Investing. Blah, blah, blah.
the official.
The official one, yeah.
Yeah.
Okay, ready?
Yeah.
3, 2, 1.
Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Fawn and our special guest, David Armstrong of Movement Mortgage. Didn't have a trivia question, but Nam, you want to continue on with the baby boomers?
Yeah, we were at a conference a few weeks ago, and one of the topics was the fix and flip market. It's going strong still, And their comment as to why, because we thought it was going to be drying up with just because maybe 10 years ago it was really strong, or 5 years ago, but they're saying that with all of there's 60 million baby boomers who are in homes that have not been updated in decades, and so as they move out, then that's going to create this new wave of fix and flip opportunities. But also, they're seeing baby boomers who are staying in their homes and actually adding to it because the millennials and other generations are moving in or moving back in. So, I mean, from a mortgage market standpoint, how does that dynamic, if people are staying in and I mean, are you going to see more refinance type activity, or?
We do. We see some renovation loans,
Yeah.
construction loans. The banks are getting most of the construction loans. That's one of their specialties. But we do see some renovation loans that occur.
Okay.
So still, I think the bigger effect is a lack of inventory.
Right.
Because, without the baby boomer moving out and creating inventory,
Yes.
that's putting extra pressure on this competitive buyer market, because the sellers really are at the advantage today.
Yeah, and we can add to that real quick. Is the presentation we did was about how that dynamic is happening right now, and how homeowners know that if they put their home on the market, it's going to sell fast. The stress is, where do we move? And so, just to pitch one more time, our bridge loan product, it's one of the things that we specialize in, where we can allow or provide the loan for the purchase without them having to sell first. And if we could do that, if they can identify the exit, the home they're going to move into, that gives them peace of mind to be able to sell on their own time frame, and then they'll refinance with you, once they sell their home and pay us off or pay us down.
It's a great resource to have, especially in this market where approximately 24 to 25% of the properties sold are all cash.
All cash.
Yeah.
It's crazy.
What's interesting about the baby boomers, one of the other things is that as people get older and they die, the kids, if they don't want to live in the house, they're just going to be selling it. And that happened. There's a house in San Rafael that has not been updated since 1949.
Wow.
Yeah, I mean, maybe it's just a carpet, and so you look at that, and but the thing is, they're asking like $830,000 for it, and it's only like 1,400 square feet, and then it's going to cost at least $200,000 to put in, and so to flip that, I mean, you'd have to have, as Mark puts it, a very sharp pencil, so it's going to have to be somebody who really just wants to live there.
Right. Yeah. Yeah.
Before we cut out, David, how do people get a hold of you if they want a very fast, regular old mortgage?
Great, thank you. Again, its phone number is 415 area code 250-7137, and go to my website at davidarmstrong.mortgage.
Very good. And Namfon, how do people get a hold of you if they want to either look at the fund or individual deeds on the PML website?
Yeah, they can call us at 415-883-2150. Privatemoneyloans.com is for purchase and trust deed opportunities.
They have to register first.
Yeah, they have to register. Absolutely, they have to be a sophisticated investor. And then to learn more about the fund, go to pacificprivatemoney.com.
Very good. All right, we're going to cut out for today. Here's our thoughts for the day. Getting over a painful experience is much like crossing monkey bars. You have to let go at some point in order to move forward. I like that. And money may not buy happiness, but I'd rather cry in a Jaguar than on a bus. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. So I cut out a little bit too early on that one. I thought we were going to go a little further. Okay, so we can end the line. Yeah.